Hello, here we are another day in the life of an insurance agent. My name is David Matkoski. Our business is called Vistaplan Financial Group. And today we're going to be covering the topic of the types of life insurance available. Over the last few days, I've been getting a lot of questions from people phoning in and asking about life insurance and wondering what kind of life insurance they could buy. So today's topic is the different types of life insurance. So let's get started. All right, so let's go. What are the different types of life insurance? There's basically three types of life insurance available in Canada. The first is term insurance. The first thing you have to remember about term insurance is it has no cash values. Oh yes, there's a couple of policies that after about 30 years might have a little bit of cash value, but generally term insurance does not have any cash value. The second thing you have to know about term insurance is that you buy a term, and it can be, they're called term 10, term 20, term 30. What the term means is the number of years that the premium stays level before they increase, and all the increases are very substantial. So when you're buying term insurance, you have to think about how long a period do you want for the premiums to stay level before they increase, and that's how you choose your term. Term insurance is also the least flexible product. If you don't pay your premiums, the policy will lapse. So with term insurance, there's no cash value. You buy a term and the premiums need to be paid or the policy will lapse. The second kind of life insurance policy we have in Canada is called universal life. Universal life is permanent life insurance that stays with you all the way through till age 100. Universal life is the most flexible of all insurance policies up there. You can increase your premiums, decrease your premiums, build up some cash value. It's a very flexible product. Once you have some cash value in your product, you can even stop making premiums and the policy will carry itself for a while. So universal life is the most flexible of the three types of insurance policies out there. And because universal life can be used to accumulate cash, you can build up substantial amounts of cash in it, or you can build small amounts of cash to cover a few years of premiums. Again, universal life is very flexible. You can build cash value, and it's permanent coverage to age 100. The one thing you have to remember about universal life is you always have to pay the minimum amount of insurance if you have no cash value in your policy. The third kind of life insurance available is called whole life. Whole life is also a permanent coverage that goes to age 100. And whole life is a par product. That means it's credited a dividend that the insurance company sets every year. Cash value is built up in whole life policies, and then the cash is credited the dividend rate. You always want to have whole life if you have 15 to 20 years before you need the cash, though. It takes quite a while to build the cash in whole life policies. There's usually no cash value for the first few years, and then the cash value starts to build. Whole life is also the least flexible of all the insurance products. With whole life, once you set the premiums and once the premiums are established, you really have to pay the premiums for the length of time that you had set initially in the policy. So if premiums were going to be paid for life, you're going to be paying it for life. If premiums were set to be paid for 20 years, then you have to pay them for the full 20 years. It's not flexible. You can't increase and decrease your premiums. It's much more structured. So again, in summary, the three kinds of insurance: term insurance, universal life, and whole life. The different products have certainly different needs. If you're just looking for straight life insurance, term insurance is a great product. If you're looking for some permanent insurance, universal life is a super product because of its flexibility. And then if you're looking to build up substantial cash values and you have the cash flow to support the premiums, whole life is a good option. So I hope this has been helpful. Please log on to our channel. I try to post a video every Wednesday. So based on that, thanks for listening. Hope this has been helpful. Bye-bye.